Hello.
Our esteemed customers, the Bank Board of Directors, the Enwealth Financial Services Board of Directors, distinguished guests, ladies and gentlemen, good morning and welcome to yet another exciting session where, as our valued partner, we invite you to engage on one facet of our lives that we all hold dear, that is housing. And following a successful launch event last week, where in partnership with Enwealth Financial Services Limited, Cooperative Bank launched the Retirement Benefits Mortgage Loan, it is only fair that we take the next 1.5 hours to deliberate on two key items. One, how this particular product works, and also shed light on how, as an individual, you can utilize your accrued pension benefits to own a home today. My name is Patrick Masharia, and this morning we are joined by a host of subject matter experts in the pensions and mortgage fields, and we guarantee that this engagement will make for a very interesting conversation. As we begin, and in line with the Core Bank tradition, I will request Susan Mosheke to open this session with a word of prayer. Welcome, Susan.
Thank you, Patrick. Let us believe and pray. Almighty and everlasting God of heaven, we come before you this morning. We thank you and we honor your name for your faithfulness and your blessings. As we start this session, God, we invite you to be together with us. We pray for your wisdom and we pray for your insight. As we deliberate and learn more about housing, God, we pray that you may guide us. This is a prayer of faith with thanksgiving in our hearts that we pray and believe. Amen.
Ladies and gentlemen, looking at what we've lined up this morning, we have interesting sessions. We have quite a number of people on this call who will guide us on different areas with regard to this particular solution. To start us off, we'll hear from Chris, the head of Mortgage Finance Department at Bank. He'll make his opening remarks and also set the mood for this particular session. We'll also get to appreciate the housing conversation from the pensions schemes perspective, and that will be handled by Mr. Simon Wafubwa. I will also get to understand the customer journey and the available residential properties for consideration, and that will be handled by Patrick Masharia, after which we will look at the different questions that are coming in during the Q&A session. Ladies and gentlemen, we anticipate a two-way engagement, and for this reason, our various communication lines are now open. You can leave a comment on the chat box, or you can reach us on 0711 049 696, or send an email to goodhome@cobank.co.ke for any mortgage-related queries. And for us who have pension-related queries, you can also send a comment on the chat box, or call 0727 617 443, or send an email to info@enwealth.co.ke. As we begin this session, I see Bansi getting ready just to shoot one of the poll questions, and you'll be seeing that popping up on the screen soon. And that should be able to guide us even as this interesting conversation takes shape. And to start us off in line with what we had on the program, I would want to invite Chris to give his opening remarks and also to set the mood by welcoming us all to this particular session. As we continue, as Chris progresses with his speech, we could actually continue and give our candid responses on the poll questions going on. Chris, welcome, and we look forward to hearing from you.
Good morning. Good morning, the participants. It's one wonderful morning when we are able to scale and get into this journey of home ownership. And we are quite excited, we and our partners, to launch pension-backed mortgage as a solution to affordable housing. I think to start with and to be able to help all of us appreciate where we are coming from. Cooperative Bank is owned by Coop Holding Society, who have about 64.56%, and individuals who are minority shareholders up to 35.44%. That's what forms Cooperative Bank. And Cooperative Bank as a group has got Cooperative Bank of South Sudan with about 51%, Coop Consultancy Agency owned about 100%, Coop Trust Investment Services owned 100%, Kingdom Securities about 60%, Kingdom Bank Limited 90%, Cooperative Insurance Society Limited 33.41%, and Coop Bank Fruit Africa Leasing Limited up to 25%. In understanding Cooperative Bank, we operate a successful universal banking model, which incorporates any facet of banking that you can look at. So we have cooperatives banking with about 31 billion book. We have fund management with about 128.4 billion. We have consultancy and capacity building. We have a retail and banking business with about 186 billion. And this is where you save, borrow, and a lot of collaboration with that one. Then we have insurance brokerage, which has experienced a growth of about 16% year to year in terms of commission. We have corporate, government, and institutional banking with about 103 billion in terms of loan book. We have leasing book of about 804 billion. We have stock brokerage, where we do share trading services and online share trading. I think what is understood very much of us is the branch network that we have. We have 175 branches. We have 580 ATMs, 8.8 million account holders, 24-hour contact centers, 4,604 staff, 479 SACCO front offices branch network, about 16,000 diaspora banking customers, 115 internet banking customers, 24,000 Coop Kwa Jirani agents, and 5 million Coop Cash customers. This gives you an overview of who we are. And I think in line with what we are launching today, allow me to just give my opening remarks and give them briefly to relate on what we are going to discuss. I think one of the key things that has emerged here is that housing is a need. However, in the recent past, the last 2 years, I think we have seen sale of properties go more in terms of e-selling. When I say e-selling, is that retro and retro tours going into properties to see them, and more of virtual tours. I think as you begin this journey and as you look at how to create affordable housing, it's important to start seeing then how do we position ourselves as a market, as the developers, as the people wanting to get properties. E-selling is where you need to be, do a virtual tour before you go to the ground. I think it's a direction everything is taking. You can't talk about housing or affordable mortgage without talking about affordable housing, because housing has been elusive. I think provision of affordable housing is a key agenda with the government, and we are enjoying today the fruits of that with the pension-backed mortgage, which is an initiative by the government to try and make it affordable. So I think as we go along this one is to remember that the government has a drive on the Big Four agenda. We have the pension-backed mortgage. Now, I think what needs to come in is the innovative housing solutions. And we can sit here and say that we are trying in our own bit with the innovative housing solution, being that the product we are putting together today is just to try and see how can people take advantage of this. So as you reflect on affordable housing, I think about how innovative you can be. And the players in this sector have a role to be innovative. I think there are solutions that are coming through because every registration comes in with do's and don'ts. And I think it's a high time we start thinking about turnkey solutions. Turnkey solutions are tailor-made houses that are made for individuals. I think it's a concept that needs to go to the next level if we are going to satisfy the demand that can be created, especially with the products that ones we are launching today. So I think the people with ability is to look through then how can you participate in turnkey solutions. Flexible financial solutions is also another one. How do we make it more flexible? Flexible, I think we have done the first step, and by allowing you to look through your pension, which is a long-term investment, and you join in with a mortgage, which is a long-term investment. I think these are the kind of flexibility we are looking for. On the part of developers, I think there is a journey we need to begin. For many years, we've done what is called supply-driven market. We developed houses more so guided by supply. I think it's a high time we start looking at demand. In terms of demand, it will remove the frustration of having developments that are not selling. So I think our call here is that there is something we can be able to do around there to allow more and more people to take advantage of this. There are quite a number of people who are also on this journey, but mostly using rental. And they have built very affordable houses from rental. I think looking how to digitize your income, especially on rent correction, is a plus in terms of maximizing on the return. These are a couple of the things that are coming through that are going to be very important going forward if we can take advantage of the landscape and the initiatives by the government. I think when you look at the residential, they are all over. And I think when you're talking about residential, commercial, and land sale, I think we need to be very specific in that the residential, although could be far now because of the cost that the cost of the land in the market and the properties that are there, we need to look at residential around Gong Road, Mombasa Road, Kisumu, Kitengela, Gong, and the whole of metropolitan. But I think what is critical is that determine what you require. Look at where the services are. And so as you go out to look in for your development, I think look at where there are residential areas. In terms of commercial, we still have commercial, and commercial supplements residential in that you find most of the commercial activities happen within central zones. The residential are almost in areas that are marked residential, and usually they are a little bit far. But I think what is of importance, the current 2 years have tended to change. And what they are changing is that a good number of us are working from home. So the question is, are we going to combine residential and commercial? I think good questions to start addressing. Are we going to have small commercials within residential? Are we going to have offices within homes? I think these are things to look through. What is the space of serviced apartments within the new setting? What is the space of residential blocks and commercial at the same time, serviced apartments and everything else? The other component that comes in also is Kajiado, Nanyuki, Kiambu, and Nakuru. Why these particular areas is because they have a lot of land. They still have a lot of land that is ripe for development. Are they the areas that you should look when you are looking at land banking? I think these are discussions that can continue. I think if we don't look at the impact of pandemic on affordable housing, I think we will be missing a point. And one of the things is that we've realized is that I think there's something we will say healthy eating, family moments, e-learning, and online meetings. I think when you hear those 3 or 4 items, they give you a reflection from March last year to now. But again, that's not the bit. Then in this case, going forward, how do you combine healthy eating as a way of having a healthy, a healthy time, a healthy home? How do you even enhance the family meals that you've had? How do you incorporate e-learning in the journey that you are beginning now of getting an affordable home? And again, how do you incorporate online meetings in your day-to-day life? These things are critical because it is only in this stage that you're able now to decide that if I want to be having online meetings, then I can afford to have a sitting room of this nature, I can have a kitchen of this nature, I can have a house of this nature, I need a house that is enabled in terms of Wi-Fi, and in your planning, that goes in very well. If you adapt e-learning for your children, then it means that when you're taking the house, you must provide for that. Because if you don't have the e-learning facilities in the house, and that's the direction it's going, then of course the kind of support structure we had during the 2 years has not been what maybe will help your child to run through very well. So e-learning, online meetings, and healthy eating come in hand with some of the things that have really changed as we go in. Directly, we've had things like social distance, working from home, wash your hands, lockdowns, reduce social gathering. And the question is, what impact do they have in your planning today? Are you going to plan with a house with a compound, or do you want an apartment? Do you want to have a house that has got a sink as you enter? Do you want to have a house that can allow for social distance? Do you have to design a bigger sitting room? I think these are very interesting things that we need to pause discussions, especially when you are planning this journey. So I think our encouragement here is that go in, and as you walk with the people who are planning for you, think through these things, because they might not go down so fast. So your planning must have all these components. I think on affordable housing, the general trend has been the rents have almost roared or gone flat. And I think that's a fact. And again, that should be advised as you go along, then what happens. But the next one is that there has been reduced occupancy in terms of office building. And the question is, with reduced occupancy on office buildings, what does it spell in terms of a home? Does the home become a part of the office? And how can we be able to incorporate it? What kind of features do you require? I think generally in the area of real estate, there's been reduced foreign investments, of course, because most of the people are held back and there was no movement. Right now, things are changing, but most of the organization did not want to go that expansion. So what does that mean in terms of the space of housing? How does it dictate? What will be the cost of the housing? And how do we participate? And I think this is where we really congratulate our government because of coming in with us to be able to fund within ourselves. That is to take up all your savings and go in to fund your own housing, even as we await for other investors to come into that field. Again, there is a whole disruption of the retail segment. And we had a discussion yesterday that was showing wholesalers are back in the shopping centers. Grocery shops are back in the shopping centers, taking up the space. That was being used by supermarkets and the big supermarkets that were all over. And again, what does that mean? Because that's a disruption. Where do you position yourself? What kind, if you're in a development, what do you look? If you're in an estate, what do you require? Is it a shopping complex or is it a shop, a wholesale shop? I think those are things to look at. I mean, a number of risks will emerge, and I think there are things that were very new to us for the last 2 years, and I think it's for us to look through. How far should you be from a hospital or a clinic? How far should you, what kind of a cover should you work with? What are these things that you have to do differently to help yourself from a health perspective? And these are things that are changing as we observe. I think accelerated behavior change, I think right now it's seldom that you see yourself shaking hands. How long can we sustain that? What does it mean? I mean, how does it change the way we do? And what do you need to do differently? I think one of the things that has really impacted on us is technology, innovation, and sustainability. This does not seem to be changing and actually has taken the space of so many things. So I think it is important that whatever that you buy, whatever that you venture into, whatever planning that is there, technology will come and disrupt in one way or another. So I think be on it, look at what is changing within your sphere, and again, ensure that you are there. I think collaboration with government is becoming more and more important. All of us have seen the role the government has played in terms of managing the pandemic, creating the awareness, getting for us the care where things cannot be delivered by the private sector. And in this case, then it means then the government has a role, the private sector has a role. How do we combine so that we're able to make the best? How do we get the areas where we can do development? The government comes and does the road as a way of moving forward. I think one of the things that might be affected and be affected negatively, and I think we are to see, is office space. Office space and meetings, big meetings, conferences, and those ones. I think Zoom seems to be taking over, and I think that's why we are here today. Maybe we would have been in a big field, in a big conference, but you can see Zoom is working. So even as we plan and we move ahead, it is important for all of us to see what is the impact of this, even as we begin the journey. Ladies and gentlemen, one of the key things that we have to run now is that we need to get into our doing. And one of the very successful models of using sweat capital, and I think Kenya, we have succeeded in that. And sweat capital is where people participate in their own paper, in their material. On Saturday, somebody is a fundi, and that seems to have delivered more houses, I think, in this country, where people build in small components, them offering their time, offering their resources, even more than maybe any other structure. What is the space of that as we go forward? Where is the space of self-help groups that have already combined and tried to build houses for members? Where is the participation of the local material and the labor and the material that are easily available as a way of moving ahead? One of the key components of delivery in our country is cooperatives. And cooperative-based model is one of the best. And this is what you'll call maybe it's like a Kijiji. It's own, it's communally owned, but all of you stay together. Why is it important? Is because that you are able to pool your resources and again be able to take advantage. So is it a time that we need to look through the cooperatives, the small cooperatives that can help each other so that as you go to the journey of house ownership? I think, like put across there before, we need more collaboration with the government because infrastructure is a little bit expensive. And once incorporated into affordable housing, it makes it almost impossible. Ladies and gentlemen, I think I want to end my presentation with this question, which I know is going through each and every one of the people who are connected today. And the question is, do I buy or do I build? And I'm sure everybody wants to know which is the answer. Unfortunately, there is no answer. Because you build if you are styled around building, and you buy if you are styled around buying. I think some of the questions that we put is that it's not very good to build your house when you are very early in your life. Tendency is that you will not be able to have the resources to match up what your dreams are. And chances are that you might not be able to use that house very well. I think a house building must be when you've really stabilized, you've determined where you are headed in terms of your career, in terms of your family. I think that's the time. Building a house is never easy. And in most cases can come with a lot of disappointments, but it's much cheaper. However, under the project we begin today, the government is very clear that we can only buy existing houses. And we leave built houses either for another entity who can build and deliver. But on this kind of a product, we are only going to deal with finished, ready houses. I think the joy about it is that housing is quite an emotive matter. And I think all of us in the morning, we left the house coming into where we are. So it is how well we plan, how well we gain from the talk we are going to have today, how well we walk through, how well we reason out is going to determine the kind of home you can get. On our part as Cooperative Bank, we've partnered, we are ready with these mortgages. Within the course of this presentation, you'll hear how you can be able to take advantage of this journey. Thank you very much, and God bless you.
Yes, for those opening remarks and a quick look at what is coming through at different times. I see an interesting conversation happening on the chat and also on the different platforms, and also tied to the very first question, the very first poll question that had come through, what's the nature of your current residence? We are actually seeing an overwhelming response from the attendees. Thank you for taking that up. You'll also see a second question, a second poll question that has come up. Just take your time, a second or two, just to click and submit your response. And looking at the questions that are coming through, I think that, ladies and gentlemen, set pace for the first speaker of the day, who will help us to appreciate the housing conversation from the pension scheme's perspective, while also sharing insights on this solution as envisioned by the Revenue Benefits Authority. And to take us through this, I would like to invite Mr. Simon Wafubwa. Simon, by way of introduction, is the founder and managing director of Enwealth Financial Services Limited. And this is a company that is operating in Kenya, Uganda, and Mauritius. As a fast-growing, innovative, and customer-centric pension administration and consulting services provider, Enwealth has actually grown its portfolio to over $7 million over the last 10 years. And that, ladies and gentlemen, is an indication that they are doing something right. And I think to take us through this topic, I actually look forward to hearing from you, Simon. Welcome, Simon.
Thank you so much, Patrick. A great honor and a privilege to be with us this morning, and also our audience that have joined us this morning on this virtual platform. We are quite honored that you made time to join us. I also want to acknowledge and appreciate the leadership of Cooperative Bank for the afforded opportunity of trust to collaborate on this noble initiative that will be of great mutual value to our customers and also the stakeholders in our sector. Having said that, Patrick, I don't know whether you can allow Bansi to share the slides from her end. And Bansi, if you are on, or Susan, you could. As I proceed, in the interest of time, just to build into what Chris has already put across, home ownership remains a very key component of the journey of retirement planning. In our experience, myself, having been in the pension sector for about 20 years now, I often observe that every now and then when a member is living at retirement, they actually use their end of service benefits for home ownership. Now you can imagine at age 60, one is accessing maybe their pension saving of around 6 million. They're going to use around 3 million to do a house in the village, which sometimes we refer to as state capital. And sometimes the challenges of financial constraint at that age would position a retiree not even to complete that house. There's even a common joke that the easiest way to know who has recently retired up country is to check a house that is maybe not very well finished. So it has very good iron sheets, but the windows are not very well finished, or even the interior. So in this solution, we are looking at early stage home ownership opportunity that our customers can enjoy the journey of retirement planning early enough, considering that they have a house even at age 35 or 30, so that they enjoy the house together with their families, even as they walk towards the journey of retirement. And we're extremely grateful that Cooperative Bank have afforded our customers and even the stakeholders in the industry through their mortgage products to be able to get this opportunity happening. So just to give you a little bit about Enwealth, our vision is to secure our customers a lifetime of financial well-being and dignity. And for us, home ownership is one of the key pillars of dignity and financial well-being in the entirety of our customers' financial well-being. Our values is trust, excellence, and fun at work and innovation. We hope that through this solution, our customers shall be economically empowered through innovation. And we know that also having a house is part of also, generally speaking, an individual's personal assets and investments. And next. in 10 years, and we are grateful to God and we are grateful to the support that we have received from our customers and our stakeholders in the industry. We are now in 3 countries and with over 120 corporate institutions and professional indemnity cover of 100 million underwritten by AIG, and with a team of close to 50, the 40 that we have there is for Kenya, and cutting across different professions. Next. Bansi. We primarily focus on pension fund administration, consulting, insurance, corporate trustee, and of course, we are going to activate the concern around mortgage through this partnership. Next. Our various products include in the retail space umbrella, a personal pension plan, income drawdown as an alternative to annuity, and we also have a medical insurance cover for retirees up to age 90 that our members can be able to have access for medical insurance up to age 90. And we also have a trust fund called Uzima that takes care of, in the event unfortunate of a demise of a member and beneficiaries are underage, they can enjoy trust fund management to take care of their upkeep and school fees until they are of maturity. Next. Those are just some of our words. And so just to get into the core meat of a bit of the discussions, I just want to make mention that as you walk towards the journey of retirement, you are accumulating cash in a retirement saving scheme that have been put in place by your employer, which is managed by the trustees and supported by various service providers. The accumulation is primarily driven by funding from employers' contributions and also your own as a member contributions. And then, of course, there is a top-up by way of investment income that accrues to your savings in retirement. We've seen the industry grow to about 1.4 trillion, and it's a hope that of many that when they get to retirement, they then have a conversion of that same amount of their savings through an annuity or income drawdown to serve as an income replacement. However, income adequacy at retirement is challenged by a lot of them then having access of cash lump sums to deploy through a home ownership, which then reduces their income adequacy, or rather what you call income replacement ratios at retirement. And through this home ownership solution, hopefully one can be able to achieve their goal of having a house early enough so that they can also, when they get to retirement, they not only have a house, but they also have income adequacy at retirement. So they have liquidity, they have a house, and hopefully also a medical cover. And these 3 key pillars will contribute to in a big way towards sustainable financial well-being and dignity for the retirees. Notably, unfortunately, that this dream remains elusive for most members in their dream of achieving a home, and primarily because the cost of land remains a key barrier, and also the high cost of properties, inability to access mortgage facilities, high cost of development, and also high cost of credit, and also the concern around awareness through appropriate financial education, financial planning education is a big barrier that often most members are not exposed to be able to be well assisted to achieve this dream. Through this partnership, CoBank and Enwealth will position this solution to the members to help trustees be able to be well equipped. What must they do in response to the recent amendment by government to unlock pension savings up to 40% with a maximum of 7 million by members to be able to go towards home ownership? Number two, there is quite a bit of documentation that will be required to be done. We want to let our customers know we have 3 resource legal colleagues within Enwealth that will help from the retirement benefits perspective in legal paperwork and documentation. Our consultants will also be in place to sit and guide members through appropriate financial literacy programs and also empowerment by way of giving information through a shared journey of home ownership. Also, I would like to make mention that we've set up a mortgage unit, a mortgage support unit to unlock this potential of home ownership for our members and our customers. And this will do then in partnership with CoBank. So having said that, according to the provisions of the Retirement Benefits Act, a member can access up to 40% of their savings with a maximum of 7 million to purchase a house, which then they can enjoy while they are still working as they walk towards retirement. There's also a provision that if those savings include post-retirement medical fund, then that has been excluded. Additional voluntary contribution is now one such great avenue that a member can use to be able to top up towards achieving their home ownership dream. Next. So we have restrictions provided by the law, and these restrictions include where a member is earning a pension, a member has taken early retirement or attained a retirement age, and a member has an existing mortgage. However, I would like to make mention that this solution is not just restricted in this context. Beyond this legislative framework, I am aware that CoBank has other products that can still enable the member to achieve a home ownership, even if they may not qualify guided within the contextual framework of the law that has been provided. And I do mention that you can be able to reach out directly to them, and they can also guide you appropriately on what are the alternatives that you can make use of to achieve your desired dream for home ownership. Next. We come in as pension experts to guide the trustees in the process journey mapping, and I don't want to dwell on this, but these are duties that trustees will entrust us as the administrator of their respective pension schemes to assist them in this journey. Next. So the 3 scenarios that arise in this process, one is if your 40% fully covers your house and you don't know even where to buy the house, CoBank has a lot of properties that they can share with you so that you can be able to pick one and probably negotiate. And then you can use your 40% saving with us through your respective pension schemes. And our team, through our mortgage unit, pension pact mortgage unit, are experts, and Susan Muchege is driving that unit on this call. We'll be happy to sit with you at the scheme level, at the member level, and to help you on that. Option number 2, scenario number 2 is where your 40% cap to 7 million doesn't cover the entire purchase price of the house. You would therefore require to be supported through appropriate funding. And that is where CoBank comes in. Option number 3 is where a member wants to acquire property through a pre-negotiated mortgage arrangement outside the scheme. Again, this is where CoBank comes in through their mortgage solutions to support you. Next. So we have various approved institutions guided by the law, and this entails financial institutions like CoBank, insurance schemes, also SACCOs, tenancy purchase schemes, which has also come through. And tailor-made solutions can be developed around this, or Ministry of Housing approved projects that can also develop home ownership solutions that members can also be able to use as a channel to realize their home ownership dreams. Next. So circumstances where residential house shall be released to the member, perhaps when a member dies, also on attainment of retirement age, where a member becomes incapacitated. And I would like to just to make mention that mortgage solutions have an integration of credit life insurance arrangements that anticipate some of these risks and proactively mitigates them through appropriate insurance policies and life covers. Also, if you migrate out of the country without the intention of coming back, also we have appropriate guidelines that are provided within the framework of the law in response to those challenges that the member may face. And we are here as Enwealth to support you in that by helping you to do proper documentation and also consultation in terms of consequential effect to your property, and also compliance within the framework of the law. Next. So let's get to some practical scenarios. And Basi, if you can go to the last slide, I think the next slide. I'd like to dwell on that. And while I am on this slide, I'd like just to let the members know that, the audience know that this is purely for illustration. It's not in any way a commitment. So I would like to make clear guidance on that. So let's take John. I don't know how many people called John on this call today. And John has an employee portion of 1 million and employer 4 million, AVC 500. And they have, so 40% of their total saving will be about 2.5 million, and they want to acquire a house of 5.5 million. So the differential will be 3 million, and they are currently aged 40 years. So it means that that differential, if, and we're not saying that is the actual funding rate, this is again, for the purpose of illustration, this is not exactly the mortgage lending rate, but you realize that at the age of 40 years to retire at age 60, we've given that the repayment might be just about 33,000. And you notice that this is probably what the member is paying rent. So with this solution, members can be able to actually convert their current rent into mortgage repayment, while the balance of their pension saving is now used as a collateral security, locked, of course, in their lifelong journey. When we did test the impact of locking the balance of their savings up to age 60 while they are repaying the mortgage, because of the power of compounding, we actually noticed that at age 40, the income replacement ratio will rise from about 13% up to almost 40%, purely because of the locking. And so we position the member to be able to get to retire with adequate income at retirement, while at the same time, they also have a house. And scenario number 2, where we have Esther, again, we've given in the event of a differential mortgage access requirement of about 1.5 at the age of 35. So repayment estimate of around 16,000 per month. Again, probably that is the rent they could be paying. And so that can easily be converted into a mortgage solution. And then, of course, David, again, where their saving is about total saving employee 1 million and employer 1 million, 40% 800,000. They go for a house of 3 million, differential of 2.2. Repayment will be around 24,000. And same as Mary, which is also given there as an illustration. What we're simply saying is that irrespective of the age you are in, we have a solution for you, and we'll be happy to reach out to you to support you on that. Next. So with that, I want to just thank you again. A lot more we are going to engage. We have a team of my colleagues, one of them being our general manager, Mr. Jojo Yuka. We have Bansi Kaleli, and together with the team from CoBank, during the question and answer session, we'll be happy to actually respond to as many questions arising out of these presentations that we've made today. Back to you, Patrick and Bansi.
Thank you, Simon. I think that's quite an interesting topic. Good insights, also looking at the kind of questions that are coming through. Maybe just to read one, which we'll take during the question and answer session. Steve is asking, how does the Enwealth scheme connect to your current pension scheme? And I think this is a question that quite a number of us who are on this call will be looking forward to see how that will be done. I'll request to respond to that during the Q&A, because you have quite a number of that nature coming through. Daniel, Anthony, Constantine, Vincent, thank you for keeping the conversation going. Let's push more also on our other platforms as we had discussed, even as we continue with this particular session. A very warm welcome if you're joining us now. And the retirement benefits mortgage loans is a very topic of discussion this morning, where as a team, we are bringing our heads together to understand how this solution works and how, as a pension scheme member, you can use this solution to own your own home. Remember, you can join this conversation by leaving a comment on the chat box or calling us on 0711-049-696 or an email to goodhome@copbank.co.ke for any mortgage-related queries. And for any pension-related queries, you can reach us on 0727-617-443 or send an email to info@enwealth.co.ke. Ladies and gentlemen, our second topic of discussion this morning will shed light on this exciting product from the cooperative bank's perspective. And as the second speaker prepares to take to the podium, you will note the third poll question, which is up, and I think that will also shed light to what we are going to hear and how we are going to take advantage of this solution to essentially own homes today. As introduced earlier, my name is Patrick Masharia, and I will want to share a few insights on how this particular solution works, so that even as we ask the questions, even as we get to the Q&A session, we will be guided by what is already happening in view of what we have as a bank. Moving on, I would want to paint a picture, and for us to appreciate how this solution works, you will realize that any person walking to a bank for bank financing, the bank would not finance 100%, but as opposed to 100%, you will get 90%. And what is the implication? Remember, you're getting 90% of either the sale price or the value, whichever is lower. So it means you have to raise something to complete the transaction. What you'll also note is that in most instances, the bank will not assume that whatever you have available can be committed to repaying that facility. But instead, the bank will only commit a portion of it, which is roughly give or take 60%. And for most, particularly those who are in employment, you'll realize, as you can see on the third bullet, that the loan repayment is usually capped to 20 years, of course, subject to retirement age, meaning that you can only repay that loan for the remaining number of years to retirement. And also in line with the question that had come through on the chat, there are additional costs that are associated with any mortgage. And this is what would accrue to roughly 7 to 8% of the cost of the house. Now, moving on, noting what we do, noting how we do the financing, the end result, and this is based on experience and what we've seen in most of the instances, you realize that as we age and as we settle in life, many and competing financial needs start to check in. What do I mean? As you settle down, you realize you have to support your family members back at home. You probably have to do your master's and you need to foot that financially as well. And all these are competing financial needs. As a result, most of us tend to shelve the goal of acquiring property to a later time in life. Now, these are the realities on the ground. And you'll appreciate that many of us will opt to continue renting due to the relatively high cost, as it is perceived, associated with taking up a mortgage. And in the end, as some of us near retirement, we realize that we are getting to retirement without actually a property that we can actually retire to. And the hard question, and this has been shared, these are sentiments that have come on the chat and also on the Q&A platforms. People are asking, is there a way out of this particular situation? Do we really have a solution looking at the product that we have lined up? And Simon has actually talked to this particular slide in depth, where the government of Kenya, in its wisdom, decided to amend the pension, the retirement benefits rules to allow us to access the pension earlier. And this is the bullet that we are referring to as a silver one, in enabling us to own properties. And Simon has spent quite some time on this, but allow me to spend a minute or so on the last item down there, where we are saying a member of a retirement pension scheme is now allowed to utilize a portion of their accrued benefits to either purchase a house or use the same as a down payment when they are purchasing that property. And Simon used this particular example. How are you going to go about this? Looking at your accrued pension, and we'll use an example later on, you could take up to 40% of your accrued benefits. And I like a question I saw on the chat, whether this would be my own contribution, or we could also look at a spouse's contribution as well. And once you draw the 40%, you can either purchase the house cash, that is assuming the 40% is enough, or you can use that, looking at what we have as option B, as a deposit for the house that you would be purchasing on mortgage. And moving on, it would be good for us to appreciate this journey, because when we talk about how this product works, it's good for us to know what comes where and how exactly the different stakeholders play in facilitating acquisition of this property. And we have about 10 or so steps, which you'll appreciate that to utilize this product in full, you'd have to one way or another undertake. And the very first stage there talks about the member, and this is you and I, members of our respective pension schemes, would have to determine how much we have saved to date. And it's against that we will take 40% to assume that that amount is available to either purchase the house cash or to be used as a down payment. Now, tied to a question that had come through, the good news, and even to make this deal sweeter, is that the 40% of accrued benefits can also be for a spouse, or rather, can also be for a couple, where you can prove beyond doubt that you're married. We can also consider both yours and your spouse's pension, taking 40% of that for use to purchase a house. So that then would trigger the second stage, which is where the member would have to source a residential house. Simon had talked about this in his presentation, that Co-op Bank also has a host of properties where you can actually pick from. Now, at this point, either two things can happen. If your 40% is sufficient, you can either buy the house cash, but if not, you need not to worry, because we are here also to sort you out on that particular area. And that would be the third stage, where the member, that is you and I, would actually apply for a mortgage facility from Cooperative Bank. This would follow the normal process, where as a bank, we would do the normal appraisal. You'd have to submit documentation in support of the request. And this would actually be the property you're buying, as well as your income details, so that we can do proper due diligence on that particular transaction. Now, moving on to stage number 4, you realize that a member would be required to meet the offer letter conditions. That is assuming the request is approved, because on stage number 3, where you're saying you submit your documentation, the loan would be reviewed, and if approved, an offer letter will be issued, which would come with conditions that we are talking about on stage number 4. Upon accepting the offer letter and meeting the offer conditions, we would move to stage number 5, where the bank will instruct a valuer on the bank's panel to undertake due diligence on this property that you're buying. And I know a question may be thrown, why are we following this particular order? Is it logical in any way? And a short response to that would be yes, because if you look at stage number 6, we are asking the member to now proceed to apply to withdraw the 40% of the pension. Why at this stage? Remember, the different stakeholders here are playing different roles. The trustees, that is under the pension, are there to undertake their role under the pension. Now, the bank is supposed to facilitate financing, and it means nobody can actually undertake a role that is not their specialty. And it is for this reason that the trustees will rely on the due diligence that has been done by the bank and the due diligence that has been done by the valuer to actually appraise the members' request to withdraw the 40%, because the trustees will require not just a letter of offer for the loan, but also the valuation report for the property being bought, of course, in addition to the ID and PIN for the member. Moving on to stage number 7, of course, the assumption here is that the request has been approved by the trustees. The trustees will issue a letter of undertaking to the property seller, that's number 1, and also a letter of undertaking to Cooperative Bank for the 40% of the pension on approval of that request. And a burning question there would be, why would we require that undertaking to the two parties? And I want you to put yourself in the shoes of any property seller. If you're selling a property today, the only thing that matters to you would be cash, what you're getting in lieu of the property that you're letting go. And that can only be in the form of cash by the buyer or an acceptable undertaking by the financier. Remember here we had said the down payment is being footed by, or rather will be footed by the 40% of the pension. And that's why we'll require an undertaking to the seller by the trustees of the scheme for the 40% being withdrawn. Now, the second undertaking to the bank is to give us the comfort that indeed that request has been approved and indeed the 40% will be paid straight to the seller. Moving on to stage number 8, which is the third last, you realize that we now go back to the normal mortgage process where the bank will give an undertaking to the seller, of course, for the mortgage amount being funded. I'm saying this is the normal process because where the bank is financing purchase of a property, the bank's undertaking is enough for the seller to release the title documents, which will now facilitate stage number 9, which quite a number of things will happen. Ordinarily, we just do a transfer and register a charge in favor of the bank, which is what we are seeing under stage number 9, where we are saying the property will be transferred to the name of the buyer and a charge will be registered in favor of the bank. The unique item being introduced on this particular stage is that there is need for a secondary charge to be registered in favor of the pension scheme. I know quite a number of us will have questions around why we need to have a secondary charge in favor of the pension scheme, but it is for a reason. And you'll see this in a later slide because, and I think Simon had alluded to this in his earlier presentation, the reason why we save in the pension is for us to access the money on retirement. But here we are saying that we want to access the money earlier, of course, in line with the rules as stipulated by RBA to enable us own a property. So how do we ensure that the member does not divert the funds or does not trade with the money? That is the sole reason why we have the secondary charge in favor of the pension scheme. Ultimately, if you look at stage number 10, we get to the point where money is released to the seller and the bank, of course, will release the mortgage amount approved. And as the pension scheme disburses the 40% of the pension money, or rather of the amount requested for, to the property seller. I'll not dwell too much on this particular slide, but it's a preamble to the next slides because Simon had also shed some light on this. But moving on to the next slide, you'll realize that as a bank, it would be keen for us also, not just to tell you that, yes, you can buy a property, you can take a mortgage, Enwealth is at hand to guide you on how you will apply for the 40%. But as a bank, we've also seen it wise to also guide you as a valued partner on what these possibilities are. Some of the properties that you could actually buy are, in Nairobi and environs. And as you can see, we have apartments in areas like Syokimau, where you can get an apartment for, 4 million. That is under 5 million, and that would squarely fall under what you call affordable housing. You can get an apartment for 4.5 million along Mombasa Road. In Gong, you can get an apartment to house your family for, as low as 6 million shillings. In Ruaka, we also have properties, and these are going for 9 million. And moving on, you realize also along Mombasa Road, probably because of availability of land, we have other properties which are very well priced. Case in point, looking at the first property we are showcasing, this is a block of apartments where the starting price for the smallest apartment is 1.155. Along Gong Road, you can also get an apartment for 3.5 million. Off Kangundo Road in Eastlands, you can get one for as little as 4.5 million. And so on and so forth, looking at the variety that we have. Key to note is that we also have what you'd call standalone units, as you can see on the last property we are showcasing there, which goes for about 11 million shillings. And these are properties that you can easily call home. Now, to make the deal even sweeter, one last item I would want to mention here is that the properties we are looking at are bank financed properties. Now, what does that mean to any survey investor out there? As bank financed properties, these are properties where the bank has already done its due diligence. So you'll not find a situation where you're buying a property that is on, or rather is developed on land that was illegally acquired, or dubious property, as you've seen the dynamics out there in the market. The pledge we are passing here is that we are availing properties that are clean. And what's more, like you said earlier, we could also advance you financing to acquire these particular properties. Quite a number of queries coming through, and I will encourage us to keep sending this. And an important thing I've also seen is that somebody is asking where these properties are, more details on this. And I've seen Purity Gashoki upload something on the chat, and you can actually look at that right now. We have actually uploaded quite a number of properties which you can pick. And more so, you can also use the communication lines that we had indicated earlier if you have any further queries on that. Thank you everybody for listening, and I think it would be good for us to move on to the next session. So ladies and gentlemen, having heard from the two speakers of the day on home ownership using your pension, I know some of us are wondering where these properties are. And I think I had alluded to this. Purity has uploaded some content which we can have a look at. And also in line with the poll questions that are coming in, we can continue engaging even as we progress. As mentioned earlier, ladies and gentlemen, our communication lines are still open, and keep the conversation coming by leaving a chat on the box or calling 0711049696, an email to goodhome@cobank.co.ke for any mortgage related queries. And for any pension queries, you can call 0727-617-443 or an email to info@enwealth.co.ke. I think, ladies and gentlemen, time is ripe for us to handle questions that are coming through. And I would want to prepare a number of the subject matter experts to get ready to handle these questions. And this will be Purity Gashoki, Jafet Ponda, Simon Wafubwa, Banis Kaleli, Lydia Moshiri, and Chris Chege to take the different cluster of questions that we would want to address on this particular forum. But even as the panelists take their positions, here's a glimpse of how the launch of the product was as it unfolded last week. I think we can enjoy this as the panelists get ready. Ladies and gentlemen, I think the panelists are now ready. And it would be good for us to address these questions based on how they've come through. And thank you, Banis. I can see quite a number of questions coming through. Also, or rather, I can see the poll questions coming through. Ladies and gentlemen, please feel free to give your candid response even as we continue. And I would request Chris to take the first cluster of questions, which relate to a topic you had talked about earlier. And I would want us to address the first question by Patrick, which is also relevant to the very discussion we are having this morning. And Patrick is asking, are a mix of office and residential apartments going to see a sustained demand given the COVID environment, and can this outlive the pandemic to give a return to investors who set up such structures? Chris, maybe you could take that first question even as you continue.
Thank you, Patrick, and thank you for your very good question. I think you are addressing to mixed use, that is residential and commercial at the same time. I think let's start by saying that some of the things that have happened in the last 2 years, it's almost very difficult to give a precise answer and say what is going to happen. But I think we can only predict what is going to happen based on what we have seen. I think increasingly we are seeing homes being converted into offices. So I believe the best next alternative is to have office blocks near homes. I think that can work, because how is it going to be, especially the disruption? How is it going to be productivity working from the house? So maybe we might have a transition. Now, for the ones who had developed apartments and maybe office blocks in between, I think it's a matter of time. And when the facts are out, I believe, yes, that's an area that can continue. Because if we look into other markets, it brings in efficiency, less interaction. So I think it's a healthier way than maybe where you'll have to live very far from your office, or maybe very far from the office and the home, where you spend a lot of time along the way, expose yourself a lot, along the way in transport and everything else, and also from a cost perspective. I see more and more of thinking from a home-based office. So if the home can be with the office, maybe better. But that's my opinion. Of course, I'm sure there can be other opinions. Thank you.
Thank you, please, for taking that question, Patrick. I hope you've answered, but if not, our lines are still open, and you can still resend the question or rephrase it for a different feedback on the same. Chris, I'll ask you to take more. And we have a question here by Fred. And I think Fred's question is very relevant to this conversation. And Fred is asking, can both spouses use their pension to buy a single house? Is the 40% of the pension based on employee and employer registered funds? Chris, please.
Thank you, Fred. And I'm sure the experts here more than me on that area. They'll take it. But to the best of my knowledge, yes, that you can be able to take advantage of the 40%, both spouses. And I think the rules are the same, and you are tied by the same rules. And I think the benefit there is that you might see yourself maybe not even wanting to borrow if that amount is enough. So I think that's something that you can be able to take advantage of. Thank you.
Yeah, and Chris, if you may allow me also just to add in there that the answer is yes, the law permits. If your spouse is working in a different organization, saving through an occupational pension scheme, through your administrator or even ourselves, we can guide you on the legislative framework through which you can harmonize or consolidate your savings for the purpose of this mortgage. So the answer is yes, Patrick.
Thank you, Simon, for weighing in on that one. I think.
And Patrick, if you can increase a bit of your volume.
Okay, can you hear me now? Is it any better?
It's faint, but we can perhaps work with that.
Okay, I think it should be better now.
Thank you, it is.
Okay, great. I think as we proceed, it will be good to take one last question. And this last question to Chris will be from Duncan. who I presume he already has a plot right now. And Duncan is asking, can you give a loan mortgage to build a home if I already have a plot?
Thank you very much. Thank you very much. So thank you very much for that question. And I think that's an interesting one. I think that the innovativeness that we said will come around this product. As you are well aware, the pension-backed mortgage does not allow the funds to leave to go and do construction. So what would happen here is that, yes, we can start with having funds, independent funds, to do the construction. And then from thereafter, that's when the property can end up being under the fund. So the funds from the pension cannot go to do construction. But once a constructed and finalized house is what can be taken up for the fund. So I think that can be a joint product like illustrated there before, in which case we start by the construction for you as an individual, then thereafter the property can be taken up and we can get the financing on the other hand. The scheme can only take finished houses. Thank you very much.
And just also to add in there, Chris, that Patrick, once the plot is developed and the house is ready for occupancy, guided by the mortgage regulations, then the pension scheme, we are able to guide the member and the trustees to release now part of the 40% towards that home ownership. And essentially what that means is then it reduces the cost and enhances affordability in this share partnership with CoBank.
Thank you, Simon, for weighing in. And I think in the interest of time, I would want us to take the next cluster of questions. And thank you, Chris, for taking those ones. And I'll ask Simon to take a few of these that are coming through. We have quite a number, and I'm not very sure we'll be able to address all in this particular forum. But Simon, you could start off by a question which was raised earlier by Steve. How does the Enwealth scheme connect to your current pension scheme? How would you assist somebody who is interested? Simon, maybe you could take that one first.
So our aspiration is to help as many Kenyans, of course, in line with the Big Four agenda of the government on affordable housing. And so we are not restricting this service just to the annual customers. We can partner with your trustees of the pension scheme, even if your trustees may not wish to move to change your pension provider to Enwealth. We can do an MOU, tripartite, Enwealth, CoBank, and your pension scheme, and cut out specific services and home ownership solutions that can now be extended to your members of your pension scheme. So we are not limited, we are open, we are happy to extend the same to your pension scheme without necessarily changing your service providers.
Thank you, Simon. And I think I'll still throw this second question to, of course, both Simon and George. Jack is asking, hi, is this 40% subject to income tax? And if so, how is the tax computed? I think Jack is asking, this question with regard to the income tax around this particular package. And maybe Simon or George, you could take it up.
Let me allow my colleague George to respond to that. George, if you're on.
Yeah. Thank you, Simon.
George. Okay, Susan, you can respond to that kindly. Okay, fine. Sorry, perhaps we are sitting in different places, could be connectivity issues, but just straight go to that answer is that yes, they'll be subject to is treated, the release of 40% is treated as a withdrawal from the pension scheme and is subject to some level of taxation. We don't have a specific straight go rate because it's graduated, guided by the number of years of membership in the scheme, and also guided by the age of the member. So there are differentiated applicable tax rates, which can be which are applicable at each stage of the member. We are happy to give those details at a personal level if the member may shoot an email to us through the shared contacts on the chat.
Thank you, Simon. I think you'll still stay on. Quite a number are coming through, but allow me at this point to jump to a very interesting question here and request Lydia to take up a question that has come through. And this question is from Stephen, and Stephen is asking, how does the scheme work where one has various accumulated pensions from previous employers? My assumption here is that a situation where one has worked with several institutions, how can this individual take advantage of what he had saved previously to acquire property? Lydia?
Thank you. So to answer Steve's question, it's normal that in the course of your employment and in your career, you will have moved employers. And what we've seen ordinarily is that people tend to leave those benefits with that employer, the first, second, and even third employer. So you've got your benefits scattered around. And one neat way that you can use is to move all your benefits to the current employer, because as the product was explained, you'll need to have the trustees of that of the scheme that you want. First of all, set up certain documents that will enable you access that benefit. So if you're having to access 3 former employers, you're no longer working there, then you might find either they may not be interested in setting up such a scheme. Maybe not many people in the former employer are interested in such a scheme. So it would be wise that you move all those benefits to your current employer so that the process of getting the current trustees set up together with the administrator, such as Enwealth, is smoother. The second option that you have is to move all those benefits from various employers to an individual pension plan. And that also makes sure that as you change employers, you always have an independent pension plan that is registered with RBA. And that is one of the options that's provided by Enwealth. And that way it's a product that's already tailor-made and ready to enable you access this pension-backed mortgage. So those are the 2 ways: move to your current employer all the benefits, and it's a pretty straightforward process where if you reach out to your previous employers, within 30 days, they should be able to pay you your benefits that you left there, or move all of them to an independent pension scheme. Thank you, and back to you, Patrick.
Thank you, Lydia. I hope you feel answered by what Lydia has said. But as mentioned earlier, our lines are still open, and we'll be more than glad to shed more light on these different areas. Fred Wakaba, we see your comments. You're asking for a prospectus. I think Purity has already uploaded this on the chat. Please share or post numbers and emails. I'll request Purity and Susan just to share those numbers again and the email address on the chat so that we can continue taking on more questions. As we continue, I can see varied questions coming in. Mary is asking, can I buy a house outside Kenya, for example, in Rwanda? And that maybe a short answer to that would be, we will restrict the properties around here. Remember, if you're taking a mortgage, it can only be for a property that is within the jurisdiction, because we can only hold a charge on a property that is actually here in Kenya. Maybe a quick one that is coming in. Do I qualify? This is anonymous. Do I qualify for this product if I have just joined employment? Well, just to respond to you, you didn't leave a name. It's coming in as anonymous. Remember, you're looking at how you leverage on pension. And by pension, I mean what you've already accrued over a period of time. So unless you have something that has already accrued in pension, like what Lydia was alluding to earlier, you may really not take advantage of this solution at this point in time. Duncan is asking, can you give a mortgage to build a home if you have a plot? And Chris had alluded to this. I think he had given an elaborate answer to that. And more questions are coming in. I'll still request that we keep them coming. We may not respond to all in the interest of time, but I would want to call on a few of us to take at least 3 more questions so that we can end in good time as we had promised us earlier. Now, Simon, there's a comment you wanted George to throw in. Would he be ready right now to come in?
I think he's I've noted he's dropped off. He's joined another meeting, but it's okay. If you may allow me just to also add in for a member who has just joined service.
Please.
We can be able to sit with the member and probably give the member options that can still enable the member to have a home ownership. And one such option is how can they accelerate their savings through addition of voluntary contribution and then integrate with the solution that you already have of home ownership from your end. So even if the member has just begun now and they don't have adequate savings, we can have a target saving. Probably in a year or 2 years, the member can still be enabled to achieve that. Remember, our shared vision is to see as many retiring with a home through this solution. As regards to the question of whether one can have a house outside the country, so from the retirement benefits regulations, it's restricted within the country. So it's not possible to, I thought maybe she want to have a house in Miami or Seychelles or Singapore. It's nice places for retirement, but for now it's restricted within the country. Also just to put in from the pension perspective. But I have Opa, who is our legal resource. Opa, I don't know whether you can add in on that area.
Thank you, Simon.
I think I responded to this question. Well, these laws are governed under Kenyan law, and for a member to access this product, then they have to access it within the jurisdiction that is in Kenya, either in the urban areas or in the rural areas. And also it would be limiting for the trustees to travel all the way out of the country just to ensure that due diligence is followed. So for purposes of investment outside the country, I think it's not allowable at this point.
Thank you, Simon. Thank you, Opa, for weighing in on that, on those 2 responses. Simon, I have 2, which I would want to be handled by the Enwealth team. And the first one I would want you to take, I know you had alluded to this during your presentation, but Emily is asking a valid one. Can I access my pension to pay for an existing mortgage, and how do I go about this? Simon, you want to say something about that?
Allow me to ask Opa or Susan to also participate in this.
Please.
Opa or Susan?
Thank you, Patrick. I can take that question. Thank you, Emily, for the query. Whether you can use your 40% to repay your existing facility. Unfortunately, that has again been restricted by this regulation. You can only access the 40% and have it as a new contract, that is to buy maybe another house, but not offset the existing facility. Thank you.
Thank you, Susan. Thank you for taking that. We have another one by Anonymous. I can see a response coming in from Lydia, but would also want to hear, at least from the pension scheme's side, maybe a response to this for the benefit of us all. What is the minimum accumulated pension amount that one should have to benefit from this product? Probably Simon, Susan, Opa, any of you could take that up, even as we look at what is coming through as a response on this end.
Opa?
Thank you, Patrick. I will take that one. So there is no minimum amount of pension benefit that one should have. However, the 40% that one can use to purchase this product should be 40% of what they have accumulated. And the 40% would be made up of the employer-employee contribution plus AVC. AVC is additional voluntary contribution with an exclusion of the funds that have been contributed for purposes of post-retirement medical fund.
Okay,
Obviously, Patrick,
sorry.
obviously the savings have been to be reasonably commensurate to the value of the house. So if someone has 10,000, 40% is 4,000, it's highly unlikely that there will be a house for that value. So it has to be commensurate, even though the law hasn't given the minimum guideline, but then we relate that to the practical reality of what would be the likely value of the house. I think so.
Okay, thank you, Simon. There's a question here which has featured 4 or 5 times, and I think Enwealth would be best placed to give a response to this. And this is from several individuals who are wondering, and I'll read one in particular, similar to the rest of the questions. If I am with X, how can Enwealth liaise with them to facilitate me take advantage of this product? Simon and Tim, you want to respond to that?
So if they are with X, we can be the Y, and then he will be the Z, and we will be able to complete that situation. On a light note,
yes, thank you.
The biggest barrier is information. So we will be happy to help in terms of legal paperwork that enable the trustees and the members to benefit. We've already developed these template documentations. So they can still remain with their X, but he's calling it X, seems like former. And then 2, our mortgage unit team will be happy to now do sensitization with the core bank team to the members, giving them legitimate and appropriate information on the journey of home ownership, even with the exposure. I like the fact that Cobank are already having properties to the, like the one on Patrick, you shared in Earth River, as low as it was 1.2 million.
Yes.
You can imagine if your savings in the pension scheme is just 2 million, 40% is already 800,000. You would then be only looking for 400,000 to have your house. And I think this is a huge opportunity that we can extend to your individual members and also the trustees. A number of schemes don't know what is the journey, what paperwork to do, what resolutions to be done. Enwealth comes in to sort all that. All we do is to just sign a consultancy or an MOU with your scheme, which is tripartite with Cobank, and we help you to walk that journey and also submit those paperwork to the regulator and follow up for appropriate approvals, because all we are doing has to be within the legislative framework, and also deploy our respective expertise in enabling this process a success to the mutual value of the members. So if you are there, you are a trustee, reach out to us through the contacts. We are not necessarily asking that change your service providers. We are happy to work even with your service providers in a complementary way to add value to the members. Complementary and supplementary way to add value to the members. Thank you.
Thank you, Simon. I think we could take a few more questions because I think these are very interesting subject based on the queries coming through. And we have Anonymous who has just thrown in a question. Is the pension inclusive of NSSF contribution or only for private employer arrangement schemes? Enwealth team, please.
Let me have Opa to respond to that.
Thank you, Simon. Thank you, Patrick. So this product is purely for occupational schemes. So these are schemes that are set up by employers for the benefit of their employees. This is with the exclusion of NSSF. And as we had mentioned, these are one will access this product basing on the contributions that they have made themselves and what the sponsor has made on their behalf, plus the accumulated interest.
Yeah, and just to also add in, Opa, in addition to the occupational, the umbrella pension schemes for SMEs and also the individual pension schemes equally stand to gain from this opportunity. And should you be there, you have worked in different places, you can consolidate your deferred portion of your savings through your preferred individual personal pension plan. We have one, but if you choose any other, we are happy still to work with your provider and co-bank to afford you this solution. So we can help you to consolidate, and then you apply your 40%. And if you merit the terms of mortgage with co-bank, happy again to serve you. So just straight core occupational pension plan, which have been set up by your employer. 2 is umbrella pension plan for SMEs. And 3 is the individual pension plans that are all approved by the Retirement Benefits Authority. Back to you, Patrick.
So Simon, I think we have a few more which are coming through, and I think this, I would really want you to handle this one next. We have Jenny, who is also throwing in a question. Can people in diaspora take advantage of this facility? Simon and Tim?
Yeah, so the answer is yes, as long as they are looking for home ownership within the jurisdiction of the country, Kenya. And we have a product called Enwealth Expatriate and Diaspora Pension Plan. It's actually growing very fast. We got approval in 2016 in the UK for global tax portability. It's a CURO, it's called Qualifying Overseas Retirement Pension Plan. And we are happy again to extend the same to the Kenyans in diaspora to apply the same product for this home ownership. And perhaps I know in the near future we are going to work together to host a specific webinar for the Kenyans in the diaspora and expound a little bit more on this. But the answer is yes, the product would apply to them. Lydia seems to want also to add in. Lydia Mushiri.
Yes, thank you, Simon, for that comprehensive answer. So yes, indeed, CoopBank has solutions for the people in the diaspora. And as Simon mentioned, we'll be going into greater details in a webinar that we are planning for the diaspora. And we support very many Kenyans in the diaspora to access homes through our current mortgage and even now through this product that we are currently working on. So we'll be addressing diaspora specifically because they have certain different needs than those who are locally employed and so on. Thank you.
And I think, Lydia, just to tie in a little bit more on that, is the concern of diaspora is anytime they send their savings home is safety. And that's where Lydia comes in through the custodial products and services, that those savings are held in nominee account of the balance sheet of the custodial bank. And that's a huge safety opportunity. 2 is growth. Returns, of course, in our market, relatively fair compared to global. And then, of course, tax, that the income on the investment through pension is tax exempt, both in terms of interest income and dividend income, and also even capital gains. So then you add in home ownership. I think these are a huge plus that the diaspora community can position themselves to leverage on these opportunities to optimize the value of their investments and savings back home. And our doors are wide open in partnership with CoBank to afford you this solution. And so in the near future, we hope to reach out to you. Jenny, back to you, Patrick.
Thank you, Simon. Thank you, Lydia and Opa, for your comprehensive responses. I hope whoever had a concern around those areas feels well answered. And ladies and gentlemen, I think we had promised to end this session in 1.5 hours. And I think we'll just take one more question for now on this forum. The rest we shall respond directly to the respective chats, and hope that you will have responses to what you're asking, and maybe be guided even as you look to explore, using this product to acquire property. And probably the last question that we'll take on this call will be, for that person who is buying a property cash, what is the process if the 40% covers the cost of acquiring the house? We have 3 people asking that, and I think it would be good to respond to that. And maybe what you need to note is, in the journey, as we had envisioned it for the customer buying a property, once they ascertain that their 40% is sufficient, they would need to go look for the property. But remember, towards the end, we had also advised on how the pension scheme would release the funds to the seller. So the key thing is to identify the property. Of course, you'll have to have a lawyer to represent you in the process of transferring the property to your name. But since you're not taking a facility with any bank at that point in time, then the only thing that will be done is registration of the charge in favor of the pension scheme, so that the pension scheme can then proceed to release the 40 amount of your pension straight to the seller. I hope that answers the question, but like we had said, our lines are open. We may not be able to take all the questions on this particular forum, but we shall attend to them so that we can fully take advantage of this particular product, depending on the kind of property we want to acquire. And now, ladies and gentlemen, in the interest of time, even as we near the end of this session, I would like to invite a gentleman by the name of Japhet Ponda to make closing remarks and a vote of thanks, even as we near the end of this session. Japhet.
Thank you, Patrick, and thank you, our partners, for participating in this event. Indeed, as Chris indicated when we were starting, it's an innovative housing solution just to ensure that each one of us, even as we retire, we have a house. As Simon has said, you don't need to retire and then you use your pension at the retirement age to build a house that will not be completed. So such a great opportunity, such a great solution for all of us to be able to plug into this solution and own a house now, rather than postpone such an event. Mine is to call upon each one of us. I think these are call for action. As CoBank, we have the properties available that you can choose, because again, that's how the journey begins. You need to identify the property. You need to determine what you require. You need to determine where the properties and different places, different types. And I think that's why you are seeing the questions being asked. Where do you want to buy this property? What type of a property are you looking for? How many bedrooms? So that you're able to get really what you want. And the solution is there. Enwealth is there to be able to also guide your pension. If it's a different pension from Enwealth, that you can be able to be guided and be part of this solution. I think mine is to appreciate each one of us on my own behalf, on behalf of the CoBank team and the Enwealth team, to take this opportunity to most sincerely appreciate each one of you as partners to have plugged into this session, just to hear what we have in store. And I believe it has been an extremely useful moment that we have learned. We have been able to get information, because what is lacking outside there is the information, and how then you can be able to plug in into this. So is to call each one of us to be able to participate. Thank you, the panelists, for being part of it. So once again, thank you everyone for taking your time today and to listen in and to take part in this great initiative. We are so grateful for the opportunity given us as a bank to be able to put through this solution. And as Patrick has indicated, we have different products that if you're not having pension or just starting, you can be able to still come in and support you in owning a home. So once again, thank you, and may God bless you. Thank you, Patrick.
Thank you, Japhet. Thank you for that. And indeed, the Enwealth and the CoBank team is at hand to guide us through this particular journey. Ladies and gentlemen, I think we had promised to end the session in 1.5 hours. And thank you for staying on to the very end. But before we end, I'll invite Purity Gashoki to end the session with a word of prayer. Purity.
Thank you, Patrick. We started with a word of prayer, and I believe we should thank God for a wonderful session. Let us believe and pray. We thank you, dear God, for the gift of life. We thank you for the wonderful session that you've given us with our customers to learn and even to work on our journey to retirement and home ownership. We pray that you may continue giving us wisdom, that you may continue loving us and continue being with us. May you help us make the right decisions even as we progress with our lives. We praise you and we honor you. In Jesus' name we pray. Amen.
Amen. Purity, thank you. Thank you for that. Thank you, everybody, for your time. Stay safe and God bless.
Thank you, everyone. Bye.
God bless.
Thank you.